Hey everyone, and thanks for jumping back into the cryptoverse. Today we are going to bring home the weekly and monthly close. This is one of those times where the weekly close happens to correspond to the monthly close, so we can knock out one of those birds with one stone. Times where the weekly. So let me post this a couple different places, and we will jump in. How's everyone doing today? All right. All right. So where are we? So we put out a video yesterday talking about this pesky 20-day moving average that keeps hammering Bitcoin down a little bit. So we want to keep an eye on that because, as we can clearly see, it was a source of recent rejection. And if we keep an eye on where the valuation of that is, it's currently at around 34,292. So if we can start putting daily closes above that level, though that level is subject to change in about 36 minutes, then maybe we can at the very least, start moving sideways or continue up. Note, if we keep getting rejected by this level, then again, it's not rocket science. If you can't get above a 20-day average of yourself for the price of Bitcoin, it means the price is trending down. That's all it means. And we've seen that before. We've seen that type of stuff before where we can't get back above it, right? We keep going up to it and get rejected, and we go up to it and get rejected. But if we can get back above it, then maybe it would at the very least indicate a potential reaccumulation phase. We're not there yet. We are simply not there yet. So let us see if in fact we can get above it. But we have a little bit of work to do in order for that to happen. Otherwise, if we get rejected here and we start heading back down, the more times we test this level, it seems that the less likely it would be to hold. So as we said before, right? I mean, the more times you test the upper bound, the more likely it is to break. In the same way, the more times you test the lower bound, the more likely it is to break. So I think we're at a crossroads. I think Bitcoin is coming to some type of crossroads here where we're going to figure out, are we going to break through it or not? But regardless, even if it doesn't break through, it doesn't mean that other coins can't still, they still have the potential catalyst to run for a while. For instance, because if we look at our weekly time frame, I think it's funny, like when you draw lines, has anyone ever done this where you draw lines on like a daily chart and then you switch it over to a monthly chart and then you just see how silly they look? Has anyone done that? I think it's pretty funny when you we're looking at these lower time frame moves and then you switch over to a monthly chart and it's like, okay, well, what the hell are you even drawing here? But if we switch over to a weekly chart and let's put on our bull market support band. So when we look at our weekly chart, the bull market support band, the 20 week is at 20.5. So the 20 week is at 20.5K. And then the 21 week EMA is at 22.9. So these are about to go up. If we want to get a rough estimate as to where the 20-week SMA is headed here in about 30 minutes or so, let's just take a look at 20 weeks ago. So we're just going to take a measured move and go back 20 weeks and see that we're looking at essentially replacing around 10.2 with 33.1. So if we were to take, say, 33.1, subtract 10.2, and then divide that by 20 because it'll be making 1/20th of the contribution, it might be going up by around $1,000, maybe $1,100. It will ultimately depend on where we exactly close, and obviously exactly what the close was there. But, it stands to reason that the 20-week moving average will probably be over 21.5 or around 21.5, maybe 21.6, 21.7 or so after we get the new weekly close. So that'll just be one of those things that, okay, that is what we would want to hold in the event of a dump to maintain the integrity of the bull market. Clearly, we haven't gone down there yet, but it's always a good thing when those things increase, because if we are in a multi-year bull market and we do hold it, then that's our theoretical lower bound. Again, there's no guarantee we would hold it in the event of a dump, but if the bull market stays intact, that would be our theoretical lower bound, just like it was many times last market cycle. So let's take a look here. Let's look at a few of our different indicators as we bring it in. So these are the regression bands. So we didn't make it to the top. We did not reach escape velocity quite yet, but who's to say what will come in the coming months, right? We really don't know if we'll go back up here in the coming months or not, or if we're going to cool down for a while and then try to reach escape velocity later. Note that when we hit 42K, the lower bound at the time on this one was around 55K up to 82K. Now it's around 56.5K up to around 83K. So it has moved up some. And this is the whole purpose of these, right? These are monotonically increasing functions. So the longer it takes us to get there, then potentially the higher we can ultimately fly. I should remind you that the lower regression band is a lot more useful. Actually, why don't we pull up the BLX here? Let me pull up the BLX so that we can actually see the longer term. So we're going to look at, let's go to the weekly chart. We're going to log auto, and then let's find our regression band. Okay. So we've seen these types of moves before, where we get out into no man's land, but we don't make it to the top. We still could make it to the top in the short term, but we've seen this before. We saw it in 2019, and so far we've seen some level of repetition in 2021. And if we go back even further to 2 cycles ago, not last cycle, we can see a similar type move where we had this massive blow-off peak. It came back down for a while and then trended back up later. So I would say, in the grand scheme of the market cycle, I think we're still relatively early on, but this market cycle could be like any we've seen before. Everyone, it would obviously be nice if it just looked something like this, where we always went down to the bull market support band and then went back up. But we have to consider, of course, all possibilities. There is a possibility, right? One possibility is that we do something like this, where we don't hold it, but ultimately, let's just assume that the March dump didn't happen, and say that we did something more like this. It's certainly possible that even if we go back to the bull market support band and we don't hold it, we could go back below it, but not trend to the values we saw, over here. We could remain in this band, which again is a monotonically increasing function. It would just be higher up. So we're not saying that's going to happen, but again, this market cycle is certainly going to have surprises. It has already showed that it's not going to necessarily behave exactly like any other market cycle. We've obviously shown the similarities between the current cycle and this one, but we know that each cycle will ultimately have its own distinct characteristics, and we kind of just have to take what Bitcoin throws at us. And right now, for this cycle, at least as measured from the bottom, it has thrown a 2019 peak in and a 2021 peak in. And we'll see what transpires in the short term, whether this is just a stepping stone to a much higher level, or again, if we see something where we have these bar patterns and if we repeat it and we just overlay that, if we see something similar to what we saw in 2019. So I think it's good to keep an open mind, because even if this happened, right, we're still moving up the regression bands and ultimately getting another opportunity to buy in. But let's see what happens. We are fairly extended. let's pull. I mean, I don't think the RSI is that useful, but we can at least pull it up and see where it is. So let me make this a color that you guys can see a little bit better. So the RSI came all the way up here and has since dropped back down. Note, historically, anytime it reached that level on the RSI, it actually dropped a lot lower. So we never really turned around at this point in the past. Doesn't mean we won't this time, but just something to keep in mind. It appears that so far, and again, this is subject to change, out of a lot of my scripts, if there's one that I think could be tested, it would be this hypothesis. Remember, we have a lot of different theories. We don't know which ones are going to ultimately stand the test of time, but it's useful to have a lot of different theories. Sorry, let me just check the chat. So the general idea with this rainbow is, if you look at the first cycle, we had an accumulation phase between these bands, okay? And then at the second cycle, we had the accumulation phase between the same bands. And then the third cycle, we dropped down a band and had an accumulation phase. And then this cycle, we were also in the same band for our accumulation phase. However, this cycle was not as clean as the last one. The last one had fairly well-defined market structure, and if you overlay the support band, we held that as support. This one has done anything but have a fairly well-defined market structure, right? We came up to the top of this band, and then we came down to the bottom. And then we came back up to the top. We actually went over the top. Now, again, if you guys follow the channel, this theory that I want to test, again, there's a decent chance it's not true. But the idea, again, is so far, each peak has fallen 2.5 log lines down. So this one, it dumped 1, 2, 2.5, and then this one dumped that half, and then another full one, and then another full one. And so we said, well, maybe the next one will also be capped at 2.5 log lines down, and from where we currently are, it would be there, and then the next one would take us basically to that 42K mark. Now, if this leaves you somewhat discouraged, you have to remember that we could, even if the 2.5 log line mark does end up being our theoretical upper bound, it is increasing. It's already more today than it was a few weeks ago. So even in the event that we come back down and then we come back up later, then this log line could be over 100K at that point. So this is one of those scenarios where time is ultimately on our side, even if this somewhat dubious rule does end up playing out. So just keep that in mind. If we look at monthly closes, since we're going to be ushering it in here in about 24 minutes, we look at monthly candles. Things look pretty good so far. We've had 4 months in a row of fairly impressive moves. In 2019, we had 5 moves, or five monthly candles in a row that were green. So we can, it's not like it's completely impossible for us to have another green candle. In the last cycle, if you look at, say, how many green candles in a row did you have before seeing one that was red? And that means, basically from when it opened to when it closed, did it close at a lower value than where it opened at? So we had moves of 4 candles in a row followed by a red. Here's 3 and then 2 red. Here was 4 and a red. Here was 5 and a red. And then we had 3 and a red. So we've seen this type of stuff before. If history is any indication, we can also look at the BLX and look at monthly candles. If history is any indication, then it seems like we should be coming due for a red candle at some point in the not so distant future in terms of a monthly candle. If history is any indication. If we go back another cycle, we had even more in a row. We had 1, 2, 3, 4, 5, 6, 7, 1, 2, 3, 4, 5, 6. So we've been able to do, we've been able to do more green monthly candles in the past, but if you look at, say, the last 3 or 4 years, it's not like it'd be that surprising for us to have a red candle for a change. But we'll see what happens there. So if we look at the monthly candles, things look pretty good. Some of the other things you can look at are 3-month candles, and actually we probably should do this on the BLX. So if we look at 3-month candles, and let's remove the rainbow. So this basically shows, the 3 months, 3 months, 3, and then we're currently in the middle of, or at the very beginning, the first third of this 3-month candle. So I think it's also good to look at these longer time frames and see that, we sometimes have trends down, but normally, over the macro scale, things generally trend up, right? So that's something to keep in mind, that even if there are short-term pullbacks, that things over the macro scale are more likely than not to continue to trend upwards. Okay, so that's something to keep in mind. And so how's everyone doing? Make sure you guys subscribe to the channel. Let's go for 104,000 subscribers. So make sure you guys subscribe and give the video a thumbs up. Turn on your alerts, and we'll go from there. So Ethereum, if we look at the bull market support band for Ethereum, it currently ranges from 668 up to 766. So in the event of an Ethereum dump, that would be the bull market support band we would want to hold. Note that these values are about to change. And again, we could get an estimation on what it's going to change to if we go 20 weeks back and see what the price was. It was around 354, so we're replacing 354 with 1318. So let's say 1318 minus 354, and then we'll divide that by 20 to get an estimation as to how much it's going to go up by. So it's going to go up by about $50. So when we get the weekly close here in about 20 minutes, we would expect the bull market support band for Ethereum lower bound to be over $700. So maybe around 720 or so. Somewhere in that ballpark would probably be where the lower bound of the bull market support band for Ethereum would be once we get that weekly close. If we throw on our regression band for Ethereum, actually here's our regression rainbow. This is an interesting one. I don't really think this chart is that useful yet, just because we don't have a ton of data to look at and fully understand what's going on. But the green line, the green one is our fair value reaccumulation zone. So this is the most important. But one of the things I've noticed is when we get to this yellow band, we have hesitated in the past. Not that it probably doesn't mean much of anything, but getting to this yellow band in the past is called hesitation here and here. These are weekly candles. And so far we're hesitating again. Note that if Ethereum is able to break into the next regression band, and if it were to go to the top of the regression band, it would correspond to close to $2,700 if in fact it could make that push. Again, we'll have to see what happens, mainly with Bitcoin. Bitcoin, we talked about it being a momentum shift in January. I think we can say that was a success, right? We had a fairly well-defined momentum shift in the valuation of Ethereum against Bitcoin from December to January. Even after the pullback, Ethereum is up 75% against Bitcoin. So a pretty nice move that Ethereum has made against Bitcoin. And it looks like it has come back up to the top of what we considered to be our reaccumulation zone. That doesn't mean we can't go above it. We went below it over here. But if you guys have followed the channel for a while, you'll remember that when we were over here, we talked about this range being at some point in the future, in the cycle, that this would be our future reaccumulation zone. We've had these lines drawn on this chart for ages at this point, and so far, for the most part, we seem to be respecting these lines. Over a year, more than a year of data, we've generally been trending up. So as we navigate 2021, there's probably going to be times where it moves up and it goes down, And hopefully we're able to generally stay within this band, so that when we look back in, say, the end of 2021, we can look back and say, okay, well, we've navigated throughout the band, and who knows, maybe at the end of 2021, a valuation of 0.05 against Bitcoin might actually be bearish at that point. In the same way that people can sometimes get bearish at a 0.04 Ethereum Bitcoin valuation because it went up to around 0.045 not too long ago. If we have a 2021 that looks something like this, and it does that, then ultimately maybe that would be our bearish future Ethereum Bitcoin valuation. Obviously, the Ethereum Bitcoin valuation is not going to do what I drew, but that's just one idea of what could happen. Let me switch back over to a weekly. Make sure you guys subscribe. Oh, and by the way, we do have a Telegram channel. You guys should join. Over 14,000 people in it, so make sure you guys check it out. We're going to be doing another update to the Bitcoin Beauty of Mathematics series. I'll work on that tonight and upload it either late tonight or early tomorrow. So if you guys like this series where each video is called Bitcoin, the Beauty of Mathematics, and we look at the fair value logarithmic regression curve for the entire cryptocurrency market cap and look at undervaluation and overvaluation, if you want to see that, make sure you subscribe, because I'll be making it live within the next 24 hours. Probably within the next 18 hours, maybe even the next 8 hours. Yeah, we can take a quick look at Link. Actually, this was one thing I was looking at. If you follow Link, which I know a lot of you guys do, I'm curious, which one are we in? Are we in this? I'm curious, who thinks we're in this channel, right? Or let me redraw that. Who thinks we're going to be continuing on in this channel? This is number one. Or who thinks we're going to be continuing on in this channel? Number two. Because this one is more of a longer term one. This has been going on since September. We briefly dipped out of it, but then since dumping, we've pressed up fairly aggressively to the top part of this channel. Now the question is does Link have enough strength to power through and continue on up at that rate? I don't know. It seems like a lot of it is going to be contingent on what Bitcoin does, especially as Bitcoin goes into February. A lot of people think one. Yeah, I would agree. I think one is probably more likely, but I don't think I would complain if two is the scenario that ultimately played out. But one is probably more likely. And then if you look at the Link Bitcoin valuation, it's still slightly shy now of the exponential fit of Link Bitcoin. So we're still down here near the bottom. I don't know. I mean, again, we don't know how Link will behave against Bitcoin in a bull market, because it hasn't ever done that before, hasn't ever been in this situation. But we'll see if we can push back. Or if not, I mean, if Link is able to stay in, say, this channel and has an amazing pump here in a few days or a few weeks, then there's a decent chance that this will get back on track. We have the monthly close and the weekly close coming in about 13 minutes. I love taking a step back and looking at our Ethereum mountain range. My favorite mountain range. I love putting in new Ethereum peaks. One of the things to keep an eye on, as we've been talking about, is the dollar, right? Don't forget the dollar. Don't forget it. The dollar will ultimately, it'll likely dictate what direction Bitcoin goes here. And we've talked about this before. If the dollar continues to put up a stand at the same level it put up a stand in 2018, and if it's able to, even if it chops sideways for a few months, if it ends up going back up, that's generally not good for Bitcoin. So if you want Bitcoin to go up, then you want to see the dollar go down. If you want Bitcoin to go down, then you want to see the dollar go up. If we go back to the daily chart, as we mentioned earlier, we're still below it. We're still below the 20-day. So obviously, it would be nice to get above that if you're wanting Bitcoin to get somewhat bullish again. But so far, we keep getting rejected by it, day in and day out. We've had wicks above it, but ultimately we keep getting rejected back down by the daily close. And now, with the daily close coming in about 10 minutes. Unless the price of Bitcoin pumps about $1,200 in the next 10 minutes, we're going to have 3 days. This will be another day where we're ultimately closing below it, even though we might have had wicks slightly above it. Make sure you guys subscribe. We got a lot of interesting videos coming out. If you haven't seen the Ethereum market cycle ROI video that I put out yesterday, it's pretty interesting. Maybe watch the Bitcoin one first and then watch the Ethereum. We're going to be doing Ethereum Bitcoin market cycle ROI. Also, in the coming days or weeks, look out for a Link Bitcoin sub-cycle ROI video. We're going to try to break things down so we get a feel for how things pump if you normalize each pump to each other. Yeah, so we can talk about silver, but only quickly. So, one of the things I'll pull the chart up. I've said before that I think silver will do generally well against gold over the next few years. And, so far, it seems to be going that way. Obviously, this has gotten the attention of a lot of people. But, the last time we looked at this chart, this is what we drew. And, obviously, silver is moving against gold, which is pretty important. We've seen these long-term shifts of gold against silver. If we just pull up silver, yeah, it's having a nice move here. $28 dollars an ounce. Yeah, obviously these are nice moves for silver, but again, crypto has better risk-adjusted returns, right? If you calculate the Sharpe ratio, they are better for crypto than silver. But again, if you're taking profits on crypto, or if you already took some profits and you want to put it into something that isn't quite as insane, maybe options like silver and gold are viable options if you don't want to put it in the stock market, or if you don't want to leave it in say USD or some type of fiat currency. Then gold and silver could present a timely alternative, or you could always just put it in stable coins and you just let it sit there, either earning interest or not, until you figure out what the hell you want to do with it. Yeah, I'm certainly not chasing silver. I'm not. I do own silver. I do own some, so I'm happy to see it go up. But again, precious metals are a very small percentage of my overall portfolio. Very small percent. So, but yeah, I'm not chasing silver right now by any means. So we have about 7 minutes until the weekly close and the monthly close as well. Yeah, just to go off my little soapbox or whatever, the whole stuff behind GameStop and uh, what's going on is utterly ridiculous. That, in my opinion, that Wall Street is crying foul because the little guy collectively were able to amass enough money to ultimately provide a fairly significant short squeeze on Wall Street. And I've watched a lot of interviews. I've watched a ton of interviews by a lot of billionaires who were running a lot of these different hedge funds. And then I've watched interviews with a lot of really successful people that are not running Wall Street, but they're successful in other ways. And it's funny because the people on Wall Street are obviously up in arms that retail would have the audacity to do something like this. And then a lot of other people that are not making their money by running hedge funds on Wall Street, they think it's great because it's just the free market. And if the idea is that retail is not allowed to buy into momentum, but hedge funds are. I mean, hedge funds buy into momentum all the time. That's one of the things we talk about on the channel is momentum is one of the best indicators. So I think the whole thing is absurd. Like, the whole thing is absurd that the platforms were delisting GME, GameStop, AMC, a lot of the other stocks that Wall Street bets were rallying behind. And arguably, what Wall Street bets is doing is better than what hedge funds are doing. Because a lot of the guys, I mean, a lot of it was, I mean, yes, some of it is just they're wanting to stick it to the man. But there was some level of, the F word, right? Fundamental analysis on GameStop. They basically coupled a series of good news events with the idea that GameStop was over, that there were more shares shorted than existed, like 130% or something. And so if you can run a short squeeze on Wall Street, who's basically been sticking it to retail for a number of years. And by the way, it was retail, the taxpayers, who bailed out Wall Street. So the idea that platforms need to protect retail, why protect retail? I mean, they're obviously protecting Wall Street because retail had to protect Wall Street when retail bailed them out a while back. So the only one that needs really protecting is Wall Street. But of course, they're going to spin the narrative however they want. Did you guys see the interview with that billionaire crying? He was crying on an interview. On a live interview, he was legitimately crying about what was happening because he thought what was happening was absolutely awful. It's ridiculous, right? It's ridiculous. You can't have it both ways. You can't say that hedge funds are allowed to do this type of stuff. And by the way, at least with Wall Street Bets, at least they publish a lot of their information. They talk about what they're doing, right? Hedge funds, a lot of times you don't know what the hell they're doing. I think hopefully, I mean, it would be nice if we could actually enter into a new era of finance where, and I think we are. I mean, more and more people have access to the same information or a lot of the same information that hedge funds do. A lot of people are smart and know how to navigate the markets. It's not like you have to work at a hedge fund to be smart money. This is a prime example of hedge funds not being smart money. They're not always smart money. So this is a good example of it that simply being true. And now they're crying about it because they were outwitted by the little guy, by collective, the little guys collectively. All right, we have 3 minutes. We have 3 minutes until the monthly close, so it doesn't look like we're getting too much volatility. In fact, maybe we'll get some volatility at the monthly open. I don't know, but we'll see. But when I mean a new era, I just mean like an era where, retail can be smart. Retail can talk about analysis on various projects, and then a lot of different retail can go into projects, go into momentum. This is exactly what hedge funds do, right? It's exactly what they do. They manipulate the market all the time. It's only a problem now because it's being manipulated, but not by them, and then it's hurting them. That's why they're upset about it. It's utterly ridiculous, right? It's utterly ridiculous. Everyone should have to play by the same rules, and if you're opening up a short position, you have to understand the consequences. And just because if you open up a short position and you ultimately get squeezed, that was the risk you took on, right? Everything has a risk. And what they're basically saying is that they should be able to take the risk and get the return. But if the return doesn't come, then they should be bailed out by the platforms. I mean, they sort of got bailed out. To some degree, they didn't because they still lost a lot of money. But a lot of them did get bailed out because they made it so a lot of people can't even buy these shares anymore. All right, we're almost coming into the close. We have less than 2 minutes now. By the way, this whole saga with Wall Street bets, and not even just Wall Street bets, but just stocks in general, it's catching the attention of people not on Wall Street bets. The idea that just because the little guy is squeezing the hedge fund, the platforms can just shut it down. This could be a catalyst to help send more people into, say, DeFi, like decentralized finance, just crypto in general, where you're not going to have stuff like this happening where someone can just make a call and say, you know what, hey, delist it for a while, or make it so that they can only sell it but not buy it. So we might see a surge of people. I mean, obviously there's been already a surge to some degree as they're pumping like XRP and Dogecoin. But anyways, all right, let's see where we close out. We're at 133 right now. About to put in another weekly candle. Let's switch over to the weekly time frame and pull up our Bitcoin bull market support band. So right now it's at 20.5K, the lower bound. Let's see what it goes to. My guess is around 21.6 or 21.7. But we'll see exactly where it goes here in a few seconds. There it is, a new candle, and the 20-week is now at 21. I said 21.6 is 21.7. It's 21.657. So basically right between 21.6 and 21.7. So our 20-week moving average now, for those who like to keep track of it, is now 21,657, and the 21-week EMA is 23,833. So we put in a new weekly candle. It had ended up being green. So we'll see what happens here. By the way, just because this is green does not mean we're necessarily turning back around. Okay, I just want to make that clear. We've seen this before where we had 2 red candles in a row and then a green, and then we still turned it down. So let's not, again, don't schedule your Forbes interview just yet. We still need to see what happens. We're still well below the 20-day. Let's see where the 20-day is, in fact. So the 20-day is now at 34,243. It's starting to level out a little bit, actually. Not completely, but so 24,243 is now where the 20-day moving average is. So that would be kind of where we might want to get above and close tomorrow if we're able to maintain some bullishness for Bitcoin. If it doesn't happen and we end up coming back down to this level, I'm going to become more and more skeptical at the idea of holding this level every time we test it. So keep an eye on that. Let's see where Ethereum went. So the bull market support band for Ethereum. So now it is around what we said. It's now around 715. So now the 20-week SMA for Ethereum is at 715. The 21-week EMA goes up to 815.